Hi, everyone. Welcome to a quick breakdown of the assignment credit and debt, as well as a quick little lesson on understanding your loans, credit cards, and a little bit more introduction into your assignment this week. Um, so we'll get into it here. So what you'll learn is we'll learn what loans are and why people use them, the difference between secured and unsecured loans, how credit card terms work, how to evaluate credit card offers, and what happens if someone fails to pay a loan. So we'll learn about all these things in this assignment and lesson. So first is, what is credit and why does it matter? So first, credit allows you to borrow money now and repay over time. And then this helps you finance big purchases like cars, college or homes. Uh, and the basic example of it is you borrow money, you use that money, and then over time you repay that money with interest. So rather than paying 10, 15, $20,000 out of pocket right away, you borrow that $20,000 and then you pay back $23,000 over a period of 2-3 years. So it's just easier. It helps you build um, buy stuff like cars and go to college and buy homes without having all of that cash on hand. But say you can pay payments every single month, and that's how credit works. So we'll start off with secured versus unsecured loans. A secured loan that's backed by collateral, which, for example, could be that very same car or house or something you already own. And if you fail to pay that back, they get then the car or house or whatever you put up as collateral. And normally these secure loans have a lower interest rates because you're risking something you already own as well. The bank has less risk because they'll get a nice car or your house out of this. An unsecured loan has no collateral. This is where you would use just credit cards or personal loans. And this has higher interest because the bank is putting more risk out there without any collateral, basically forcing you to pay your bills. For an example, if you fail to pay a secured loan, the lender can take that collateral. So secure versus unsecured loans there. So why loan terms matters is what we'll talk about today. The key terms affecting the cost of credit is your APR or interest rates. They're a little different, but similar enough for this topic. Fees that go with this loan, the loan length, or any down payments you make on this loan to lower the cost of it. Eventually, if you start with a bigger down payment, it'll be cheaper throughout the whole thing. So we'll introduce the assignment. Every time I put it into Adobe Connect here, it messes up the formatting. But introducing the assignment, you'll analyze a real credit card agreement to learn how lenders present terms, fees, and interest rates. Then you will fill out your activity worksheet and create a short advertisement slogan for your card. We'll go through some examples of that today. So this is a screenshot of the PDF that we'll be using for today. In the assignment, it's linked with a different one, so there'll be different numbers and different things, but we're using this one for an example, and we'll go with the actual agreement here in a second. This is what it looks like here. It gives you things like the annual percentage rate, the APR, the secured signature, all that stuff, and we'll take a look at this a little bit more in detail here. So understanding the APR section. The Visa and Platinum APRs, that goes from roughly 9 to 16%, and that's based on credit worthiness or your credit score. If you have a good credit score, you'll get a better percentage. Visa signature APRs, 11 or roughly 11.5 to 17.5. Secured Visa is a fixed 15.99%, and then the APR is just the cost of borrowing money there. So we'll take a look at the actual application here and what it looks like. So yours will look somewhat similar to this one. So this is an actual Visa Platinum / Visa Platinum Rewards signature application. So it has all this information here. You'll scroll through and you'll find the same stuff that we're looking for here in the slides. So understanding fees that come with this application, a late payment fee could be up to $25. The cash advance fee is $5 or 2% of the amount if you need stuff to pay up ahead of time. Return payment fee up to $25. And this is just stuff like behind the scenes stuff. You don't really need to know everything here, but some of the stuff, yes. Pay by phone fee, $10. Statement copy fee, $5 a page. So that's some of the fees that would be on the fee section. There's things like grace period and interest that also talks about in this application. So this credit card gives you a 25-day grace period. So after the billing cycle to pay your balance without being charged interest if you pay in full. So if say your billing date is October 1st, you'll have 25 days after that to still pay after the due date if you pay it in full without being charged any interest. So you get some leeway there as long as they still get their money in full. So that's what this credit card offers. Secured credit card options. So some version of this credit card is secured. That means that the line of credit or credit line is backed by the money you deposit. So that's what it's backed by. So the disclosure notes that secure credit cards may be secured by property, shares, or accounts, and this helps people build or rebuild credit using these kinds of options of this kind of credit card. So now we'll walk through the worksheet here. Here are the boxes that you are looking at right now. So things like the credit card name, the category, if it's a rewards or if it's a store, or if it's just a general one, the card claims, what's the marketing promises, the APY, basically what's it promising, low APR, high APY, fine print details. Those are some of the things that we covered already. The box info, things like APR, fees, or the grace period that the credit card offers, any bonuses or rewards, and then potential areas of concerns. So here's an example of the completed worksheet using this example one. The card name would be a Visa Platinum. This one's just a general credit card. It's not attached to really anything. The card claims it's a low starting APR, varies based on the credit worthiness. That's what an example one there. Some fine print would be an APR varies with prime rate, fees apply, secured version available. And then the APR ranges from that 9.24 to 16% range, again, based on credit worthiness, but you can just put that there for the APR. And then bonuses and rewards. Rewards are only for that Visa Rewards signature card, which this one was not applying for. And then areas of concern is high penalty fees, variable APR, and secure card is heavily collateralized. So that's an example breakdown of this application. So then the last thing, or one of the last things you need to do is create an ad slogan. Something like this would be a Visa Platinum, flexibility with a low starting APR. Earn rewards every purchase, Visa Rewards. Build credit safely with the Visa Secure card. So just come up with something that aligns with the card that is linked. And then the last thing, reminder to execute it. So what happens if a borrower fails to make required payments on a secured loan? We talked about this in this video. So just write down if you were paying attention or come up with your own on what will happen to someone borrowing if they fail to make payments on a loan. All right, so that is the assignment. Let me know if you have any questions on it. Thanks. Bye.